Well, another silver update. The word of the day is that the U.S. Mint, and not talking about silver sales across the board everywhere, but the U.S. Mint supposedly is selling 191 times more silver than gold. So, interesting little factoid I picked up. And, as far as that trend continuing, that can't continue. But I got to mention a couple other things and something with the markets, of course, with Europe again, because that is going to affect greatly the value of silver. And if I was in Europe right now, I'd be if I had money to invest or whatever it was, or if you're one of these people, you're fearful what's going to happen with the euro is going to be devalued even further. We're going to go to different currencies. I'd be loading it up on silver and gold like crazy. And considering silver is something that most people could buy piecemeal a lot easier than gold, I'd imagine silver sales are actually taking off like crazy in Europe. Now, that was an interesting little factoid I picked up. 191 times more silver being sold by the U.S. Mint than gold. So that trend is not going to continue forever at these current price levels. I want to point out some other things about in Europe, Spain, and Italy. Now, in Spain, if people are aware, they had a very big housing real estate bubble going back, some years back, 2006, 2007. It was way up there. Now, 2006. But when it crashed even more so than the United States. Now, in the United States, I don't know if the bubble's actually still going to go down, but it's probably near the bottom. Real estate's probably near the bottom, but not necessarily a good investment because it's not going to spring right back. In Spain, it's still going down. Now, I'm going to relate to what's going on in the banking system. A lot of times, people don't take these different facts and they put them together. For instance, we do know that people are fearful in Spain and Italy of the banking system, and the money's been moving out of there since 2011 and going into like Norway banks, Belgian banks, Swedish banks, Swiss banks, and German banks. Getting out of Italy banks, Italian banks, and Spanish banks. Now, the reason for that is also related to the real estate market. The reason is that when you have a loan or an asset, depending on which way it is, if it's on a bank's books, you might have a loan backed by an asset, and you're reluctant to bring that asset into troubled assets because you'll have to write it off, and that's going to make your balance sheet look much worse, which will mean less people are going to want to deal with your bank, so you'll lose more customers. So there's a major reluctance to admit that you actually have troubled assets, and this goes across the board even for builders and stuff too. I mean, when you have a balance sheet and the price of an asset is going up, you're showing it only as cost. But the rule is if the market value significantly changes, you should at least make a footnote and possibly do a write down and show it as a loss. So a lot of times these banks are very reluctant to do this because they already wrote off a lot of stuff. But the market in Spain, the real estate market in Spain, is still declining. It's in a downward direction. So that means the banking system is actually in more and more trouble. If you add up to the unemployment rate of 25 and below is over 50% in Spain. In other words, that's as bad as Greece and everything else, and it's very bad also in Italy. Another sign that Italy's actually going down the tubes is like Mario Monti. When he first came into office, he had a 70% approval rating. Now it's down to 35%. As a matter of fact, things have gotten so bad in Italy that Berlusconi is actually making a comeback. Now, what does this have to do with the price of silver? Actually, a lot, because I'm going to say this. I'm going to say that the euro is not going to fall apart like the way people keep saying it is. It's going to totally fall apart, and people are going to go back to their individual currencies. I say they're going to do a lot more fiscal easing, and the policies that were set forth, or recommendations that were set forth in Foreign Affairs, which is published by the Council on Foreign Relations in New York, that's going to be the policy. They're going to have Germany act more as a backstop. They're going to have the ECB actually buy up more debt. The European Stabilization Fund is going to increase, and they're going to do a European-wide bond at one point in time, as George Soros recommended. All these things are going to come about. So I don't think the euro is actually going to go away, but there's going to be a lot more easing policies, which is going to bring up metals. Now, as far as physical buying, like I stated, like 191 times more physical silver being sold by the U.S. Mint than gold. I'd imagine that's the same kind of situation that's going on in Europe, even more so. I would be doing that, definitely. There's no doubt about it. Now, as far as what's going on in the United States, now today the metals are looking pretty flat. I mean, nothing really much is going on. The markets are pretty flat. Actually, they were down a little bit. Now they're up a little bit, but they're still above 13,000. I know the metals have been actually kind of boring lately. Crude oil is up. Now, the reason crude oil is up a little bit more today and had a little bit of a bounce, basically, I'd say three reasons. The first reason being that it happened yesterday, but also there's still fear in the markets about the Kurds in Iraq. They were bombing and sabotaging some of the oil pipelines are going from Iraq to Turkey, and they successfully bombed some of those and stopped some of the flow of oil. They found a few areas where the bombs were and stuff today, so they dismantled them, but there's still that fear. So that brings the price of oil up. Number two was the North Sea oil. They're having problems with the North Sea oil, which is actually bringing up the Brent prices. Now, three is something actually is my own thinking. Because since there's a drought in the United States, and because the way we produce oil in the United States is mainly shale oil, which requires a hell of a lot of water, they use hydro techniques to extract oil from shale, the price of water has actually increased more than double in a lot of areas, and it's actually become a lot more unavailable. So I'd imagine oil production in the United States is getting a hell of a lot more expensive. It's probably a good bet. Actually, I noticed some of the stock tickers that some of the big UBS is recommending for people, Union Bank, Switzerland, a lot of these big investors are recommending for people are actually in the energy sector and even in Barrick Gold, the mining sector for gold. A lot of people don't realize that, but it looks like Jim Rogers' assertion that agriculture is going to be a good bet. Potash Corporation and stuff should be a very good bet. A lot of these things are going to go up, and the commodity prices are going to increase whether there's a salvo of QE or not. They're still going to increase. They're still going to increase due to weather conditions and tensions in the Middle East and the debt situation in Europe. Now, as far as what's going on in silver specifically, it's been sitting flat for a number of weeks, and I know it's getting pretty damn boring, but this actually, to me, is actually a very good sign because silver's not going to stay flat forever. That you know that because it's actually what it's been doing for the last. This is a weekly chart going back to 2008. If you look at silver, going back all the way, it's not really stays in one place too long for very long, and actually this is about the most stable the price has been over a period of time as it has been in many years. It's very unusual. So it's almost a dangerous market to get into on any kind of leverage. But if I was to guess, I would actually wait for a signal where there's going to be a crash in the U.S. equities market first. To me, that would be a signal to you might see some of the silver pull back some then. But this is something I'm coming up with. I'm looking at, like, for instance, the Dow, for instance, is up over 13,000 right now. If you look at the Spanish market, for instance, the Spanish stock market, it's down to about the 2008, 2009 lows. You're actually better off, even though that looks really bad right now, if you were going to place some money initially, you'd be better off buying Spanish equities right now than U.S. equities in general. And that is because our markets are still highly pumped up for some reason. And this is something that doesn't make sense to me, which means it may come down. Now, I've been hearing about equities, they're going to crash this time, they're going to crash last October and stuff. Right now, I'm leaning towards they're going to crash. And the reason I'm saying this is because we looked at the PMI data, the primary manufacturing index for the globe. It's been going down for the last several months, right? And it's been going down also in the United States. Commodity prices across the board are down, except for agriculture, and that has nothing to do with policy by monetary policy. It has to do everything to do with the water, the drought situation. That's the only reason agriculture is way up. Now, that tells me in a nutshell that everything is actually going down all the way across the board. You look at the commodities are down, that means production's down. And the numbers reflect that in the PMI data that production's down. Detroit area is down, automotive production and everything like that. The Baltic Dry Index, which shipping is down. And, another one I picked up was that garbage index, which I thought was very important because that reflects GDP. That's way down, and yet GDP is up. So I think the markets are being pumped up artificially somehow. I know that sounds pretty conspiratorial and everything, but I think that actually is the situation. So when they get dropped hard, that's when I'm going to see Bernanke act. That's how I think the personality is going to come about. Now, also come here in September, there might be a number of changes going on with the euro too in policy, because they're going to have to move away from this austerity garbage. 50% unemployment rate or more amongst Spanish youth, that's ridiculous. They're going to wind up, their leaders they should be getting worried about stuff like that. I mean, they really should be, because, that's almost like the classic French Revolution that's going to happen over there if they don't straighten their act out real fast. So they're probably going to take the fast route, and the fast route is more easing. That's going to be bullish for metals. Now, one metal a lot of people are ignoring, actually two metals, but this is a chart on platinum. Platinum's down at 1400. Now, I re-entered this market down here at 1600, which was stupid, but because it wasn't that stupid because I didn't pick the absolute low where it bounced off to, but it was dropping. Like, in other words, I got out mostly into cash up here, and then I went back into it, and I should have waited even longer. But I think this is actually going to play out very, very well with platinum and palladium. A lot of people are ignoring these two metals big time. It's like the silver fetish has to be this and that and all this kind of garbage. But platinum, if you look historically, how long has it been below the price of gold? Not very long. Not very long. Now, if you look in 2011, I want to do this real fast with platinum because it's basically about silver. But if you look back in 2011, there was record demand for platinum. All-time record for demand for platinum. So you think to yourself, well, there must have been an all-time record demand. There must have been all-time supply. No. They actually had supply shortages, and they had to take major amounts of platinum out of existing stockpiles to meet demand. Now, fundamentally, you'd say the price should go down. No, it didn't go down. As a matter of fact, it crashed. It crashed over here. This was because they raised margins, even though it was sitting flat all year. So a lot of times your fundamentals, you really can't look at that stuff too much to judge which way something's going to go. And in this case, it doesn't make a lot of sense to me because a couple big areas for platinum, for instance, is automotive, and which is even more so true of palladium. But what happens is, in automotive, like they're using it in the catalyst, but what goes on, you can say, oh, that's only one use. But the thing is, automotive is a pretty damn big industry in the world. And it's coming on much stronger in China, India, in Brazil, and other countries like in Vietnam and everything like that. So all these countries are going to require catalysts for the vehicle, which they use palladium mainly, but for diesel motors and a lot of Japanese locally used cars, they use more platinum. But they use both in the catalyst. So that demand is going to come on stronger and stronger. And also, if you look at hybrid vehicles, they require even more precious metals. So even though it's only one area of the economy, you could say automotive, it's, pretty much everybody drives a car. And if this type of stuff, manufacturing, is going on more and more in the other third world countries or the going on to be the new first world countries, you could say that platinum is going to have a hell of a lot more demand coming up in the future. And it's expected, it's forecast that platinum and palladium for 2012 are going to be up, up on demand. Now, South Africa, they're having problems with strikes and stuff like that, electrical things. And, you know, I'm going to bring out one other thing about platinum in this same video, rather than make a separate video, is, and you know, you can lie with statistics. In other words, I could say, you know, all these geographical lands throughout the world have all this platinum, and that's why it's not short. Well, the point is getting it the hell out of the ground. Platinum costs a hell of a lot more to extract and it's to process than gold. A way lot more. That's why it's considered more rare. You know, it's almost like saying, you know, well, you know what? Hey, we also know there's a hell of a lot of oil in the Gulf. Go get it. Go get it. How much does it cost to get it, right? It's the same type of deal. But in the case of platinum, if you're looking at the price point it's at right now, say 1,400, and gold is up a couple $100 more than that, right? The you might say to yourself this, use some simple logic. If you walk into a jewelry store and you said would you buy a platinum piece over a gold piece if it was cheaper or the same price? More than likely, especially for white gold, because white gold is not as durable and it might require some rhodium plating in the future that you would not have to do with platinum. Platinum would actually outlast white gold, most white gold. So I'm looking at this metal. I can't see it staying this low for this long, but I would not play leverage. I would just buy the actual, you know, underlying asset and just let it sit. And if you got patience, it should play out very, very well. Now, that's the same with palladium too. They're way depressed. People are ignoring these two metals. They only think about silver and gold. They're ignoring the other two. And the other two are going to fly more than gold. When things take off, they're going to do better than gold. Now, as far as silver again, there's a couple of things that can actually come up for this year, and I know people have been talking about QE for the last year. I was thinking that Ben was going to do it. A lot of investors thought he was going to do QE. I think what's going to actually cause QE is the equities are going to go down. And, you know, I wish you had the 100% clairvoyant crystal ball going into the future, and I don't want to sound like some of these people spreading doom and gloom, but I do think the American equities are going to go down pretty hard, pretty soon. And the reason I'd say, let's say, pretty soon in the next few months. How's that? Even though elections are coming up, because everything else is down. I mean, all the indicators are showing everything's down. You know, the garbage index was one of them. It was also the commodity prices in general, except for agriculture due to drought, and the PMI, the manufacturing, and the Baltic Dry Index. And other places around the world, the equities are down. So why are the American equities still up? You know? I mean, that's almost like the same situation that happened in the 20s. You know, there was a lot of signs that things were slowing down, but everybody felt good about the stock market. So I'm using plain common sense on this. I'm not trying to say, you know, October is going to be the month. It may be. But I'm just saying that it could very well be this October. That wouldn't be a bad bet, maybe a couple months away. But it doesn't make sense when all the other indicators are showing things down and markets are still up. But if the markets go down, you know then Ben Bernanke's going to act. It has nothing to do with the election or nothing, anything. If the markets go down and the equity markets retrace really hard or something happened with that, he's going to act. And actually, if you look back to 2008, 2009, really what happened first, it was the commodities that went down first, then the equities. Now, we might have some kind of situation like that again, so I'm going by like plain common sense, fundamental historical type principles rather than drama. But we can also look at, as far as physical buying in silver, there seems to be a hell of a lot of physical buying of coins going on. So 191 times more silver coins being sold by the American Mint than gold coins by the American U.S. Mint. So That's telling you something. I think also in Europe it's probably even more so. Because if I was a European and I was running a business over there, say for instance, I would not be putting my money in a bank. I would be putting it in silver, to tell you the truth, because no matter what the hell they do with the euro, it's not going to matter because you're going to wind up, you're going to have the silver, and I think the silver is going to protect your investment. So all these really smart J.P. Morgan investors, Goldman Sachs, who say silver is a risk asset, I know why they say it's a risk asset, because it's very volatile. But I have to say, in my mind, I think of it not as a risk asset. I think of it as a safe asset. And actually, most people who buy physical silver buy it for safety. They buy it for the exact opposite of what the professional investors would do. The exact opposite. And that is sometimes why the markets seem confusing. And, a very good example is like what happened with platinum in the year 2011. It went down even though there was an all-time record demand for platinum, and the supplies were down with strikes and power outages and everything like that. Price went down. Go figure. I don't think this situation is going to last very much longer. And when it takes off, it's going to surprise people. But the big question then is going to be, when's the next peak? When's the next peak? In the case of silver, I think it's going to be between 60 and 75. That's what I'm thinking. And also in the case of the guys I call the silver pumpers, whatever the hell it is, they're going to be out there telling you 150 right off the bat. It's going to go straight over. It's going to break. It's going to get close to 100. It's going to break 100. They're going to say 150. The usual culprits. And, I don't want to sound negative, but I'm trying to give people some reality here, because this is for like the little guys. I don't have a high dollar production here. I'm not trying to get you into my brokerage firm and sell you my account or sell you accounts. I'm just trying to give you some common advice here. It's not a high dollar production I'm producing here, so just bear with me on this. When they're telling you silver's going up to 100, it's going up straight to 150, it's going to go all the way up to 90 or whatever the hell it is, they're probably going to be selling. That's probably what they're going to be doing while they're talking up the market. That's how they make the money. So, I don't know. If you want to think I'm the bad guy by saying that, fine. But I'm telling you, man, that's exactly how it works. It's a card game. So, I'm giving you the straight scoop on it. I think the next price point where it pulls back is going to be between 60 and 75. I am not selling all my silver at those prices. I'm selling pieces of it, some of it. That's what I'm doing. So, playing conservative. So, do what you want, but that's my advice.